Forecasting is one of those strategies in every business that needs to be implemented. It's one of the most overlooked things. It's one of the last things on everybody's to-do list is just put a budget and forecast together for the future. And the biggest difference is this. A budget is the past, looking at what we've done and where we're at in comparison to it. A forecast is what's next. Where are we heading and what do we expect to take place? Revenue, cost of goods, overhead, payroll, and of course, your profit margins. So my name is Bryce with Vanguard Partners. And in the next few moments here, I'm going to walk you through how to build a forecast for your business and why it's so vital and important to your business. So what is forecasting? Forecasting is predicting the future, what your revenue is going to look like this next quarter, this next month, this next year, what our profit margins are going to look like in accordance with that, and then what are our expenses attached to that revenue, attached to that profit margin, to make sure that we're in line, that our profit margins look good, that we are going to be profitable in the next quarters in the future to come. Now, this is really important. Just let me give you an example of how you can do this and how you can really predict what's coming up. If you've got clear data from the past, that's the best way to do it. And so I'm going to talk about that first. And what I mean by that is if you're an HVAC company, right? You do AC or electric or plumbing. A lot of those industries are very seasonal. So if we look on, the previous years like 2020, 21, and 22, and we're looking at next month. So let's pretend we're looking at the month of June for a second. We want to know what to expect in the month of June for this 2023 year and season. Well, in the HVAC industry, we know that things drastically ramp up in the summertime when people really try to ramp up their AC for the first few times in the year. And so what we can do is look back on the previous 3 years to see what our numbers were. Let's say 2020 was $40,000 in revenue top line. And then in 2021, we were at $50,000. And then we got to 2022, we were at $60,000. So we're seeing a $10,000 increase year over year. Well, we can expect 2023 to be another $10,000 increase if all market conditions are similar, because our brand has been building. The company's image in the local area has grown. And so we've got a bigger client database. And so we can expect that our top line is going to be about $70,000. Well, if we know what our cost of goods are and that percentage of cost of goods, what our overhead, we should be able to forecast what our net profit is going to be for the upcoming season. All right, so what do you do if you don't have, previous years of data to go back and look on? Well, if you're an HVAC company in the same situation, the same scenario, maybe we've only got 3 months of data and we know summertime's coming up. And let's say that 3 months ago we did 45K, we did 55K, and we did 65K, right? Back to back. So we're gonna take an estimation of those 3 months. Let's be conservative with it and say that it's 55,000 is the average of those most recent 3 months. And plus we're going into season right now. And we know things are going to ramp up. We should probably go to the higher end of those averages and be at $65,000 for next month, maybe throughout the entire summertime. Now, with that, we know what our cost of goods are. We know what our material cost, we know what our payroll cost is going to be, what our overhead cost is going to be, and what our net profit should be. So we should be able to make some good decisions on the future of the company. Is it time to hire? Well, if we can see that we're continuing to ramp up, we might need to prepare for what's next. So these things are going to help make sure that we're planning for the future well. All right, so here's where the matching of budgets and forecasts come into place, and they really align with each other. So forecasting, again, is looking to the future. Budgeting is looking at where we are right now in comparison with what our plan was, right? So we're saying, here's where our expectations for the month is. Now, the budget is created along with those expectations and making sure that we meet them. Right? We don't exceed costs, and we make sure that we do exceed income so that our net profit looks the way it needs to. So along the way, most people don't look at their budgets until the month is completely over and done with, and we look at last month, but it's too late. We need to make small incremental adjustments along the way. So you take your forecast. Let's say it's $65,000 for the month because that's what we expect to do this upcoming month. Well, week 1, we're going to look at it and make sure that our income is about 1/4, because 1 week is 1/4 of the month, right? Is 1/4 in. We haven't exceeded about 1/4 of our expenses, and that we're on track to hit our net profit. And so if anything unforeseen comes into the picture, we can adjust and make sure that we increase our net profit and go back to the drawing board and make small incremental adjustments along the way, rather than waiting till the month is over, looking back and realizing that we made big mistakes and our net profit was actually not where we expected it to be, and now it's too late. Right? If the month's over and done with, it's too late to do anything about it, which most bookkeepers, most accountants are going to send you a report for last month on the 15th of this month. It's too late to do anything about last month. It's too late to go back and compare with your budget and make those small changes to make sure you're profitable. And the crazy thing is, it only takes a little bit of a percentage to make a wildly big difference in your net cash, right? What is net cash? It's the increase of your bank account month over month. And so if you just change 5 to 10% of a difference of your net profit by making these little adjustments along the way throughout the month, well, that's 5 to 10% more money that will be in the bank account at the end of the month. So on a $65,000 month, 10%, $6,500 the bank account should be increasing every single month by making these really small adjustments along the way. They're super important, but you can't do that unless you put this forecast in place and then turn it into a budget to make sure that you're on track to hit these goals. Listen, I understand that this sounds really confusing. It's really difficult to implement, especially if you've never done it yourself before. But if you're willing to invest in this, if you're willing to take these next steps so that you know your numbers, you understand your numbers, and you know how to make good business decisions based on them, then go ahead and click the link below, and I'll see you there.